A very interesting company called Wise, and they specialize primarily in transferring money between different countries.
It's been a bit of a major win for the UK tech sector, growing to about 11 billion market cap. This is around 145 billion cross-border transactions annually.
Wise is 3 to 10 times cheaper than banks. All employees are shareholders, still strong alignment with the long-term focus, which is what we like to see.
So there's always that, have they got the ability to really grow and scale into a huge dominant company?
Welcome to the latest episode of the Intelligent Wealth Podcast. And with me today, my usual fellow broadcasters, Awet Gourmet, who's the head of research at Minerva Money Management, and Carl Roberts, my fellow director. So this podcast, what's it all about? It's all about primarily the subject of quality investing, but not only. And we're here to help you with your own research into investing in great quality businesses. It's not advice. Everything we say today is really just to help you with your own research, because we've found that when you just try and follow other people's tips, it invariably goes wrong, because your share portfolio should reflect you, your personality, your timescales, your emotional makeup, etc. You cannot replicate someone else's. So just treat this as a guide. Of course, share prices will rise or fall, and sometimes they'll fail. We all know that. So just treat this as a healthy discussion to help you in your decision making. So today we're going to cover a very interesting company called Wise. They used to be called TransferWise, and they specialize primarily in transferring money between different countries and on a large scale. And they're quite innovative and quite different to other foreign exchange companies and banks, in that their charges are much lower and the speed of transfers is much faster. So this is a really interesting company. It's a Fintech disruptor, I would describe it as. It was formed by two guys called Tarvet Hinrichs, who previously was Skype, and Christo Carmen, I've pronounced that properly, ex-Deloitte's. Basically, it started out with one of these two founders being frustrated at the expense and the time-consuming nature of transfers of funds from Estonia to the UK and other countries. So it started with a problem that he wanted to solve. So he decided to set this business up to solve it. And it's been an incredible success, because he considers that the bank charges system for cross-border payments is totally unfair. And I would agree with him. I think it's right. Now, interestingly, the primary way in which they've managed to transfer funds quickly is based on a very historic trading system that goes back thousands of years. Basically, traders all that time ago wouldn't transfer lots of, say, silver coins or blocks of gold to, or whatever it was, shells or commodities, to other countries to make payment. What they did, they had trusted agents in these countries, and those agents would have capital, and they would basically, so let's say you wanted to transfer, I don't know, £20,000 in today's money to, say, Germany. You'd have someone in Germany that would have £20,000. So you don't actually transfer the money, but you use like a debit and credit accounting system to balance the books. So that's the way it's done. And that's what gives it lots of speed and low cost. So it's interesting that this very modern company is primarily using that methodology. They're using agents in other countries, in quite a few countries, to do something which is a tried and tested scheme of transferring funds that's lasted for literally thousands of years. So that's what I find quite interesting about it. And they're the only company that's really seemed to seize onto this opportunity big time. So that's my introduction. Interestingly, one of the two directors, I think it's Christo Carmen, is still a founder owner of the company. The other director, Tarvet Hinrichs, has departed. He's no longer working for Wise. And interestingly, Christo Carmen still owns 18% of the company. And this is a publicly listed company. That's quite significant skin in the game, which is always an aspect we really like with these fast growing companies. So that's my introduction. Now for some much more meat on the bone, let's hand you over to Carl, who's going to talk about performance figures, competitive advantage, business model, etc. Over to you, Carl.
Yeah, thanks, Tony. Yeah, I think Wise is one of those good British success stories. We've not had many of those in the last few years because it was founded in the UK, I think in 2011, listed on the UK London Stock Exchange in 2021, which is unusual for what we describe as a technology company or a fintech company, essentially. So to get one of them launching on the UK stock market is quite rare nowadays. So yeah, it's been a bit of a major win for the UK tech sector, growing to about 11 billion market cap. I think by this year serves around 15 million customers, processes around 145 billion cross-border transactions annually. So yes, it's done really well. But interestingly, it is shifting its primary listing to the US. That's coming up shortly. We'll come back to that maybe in a second. But yeah, just to touch on essentially what Wise does. You've already mentioned it, Tony. But yeah, if you don't use Wise and you're using banks, then you're essentially using the SWIFT method of money transfers across borders. And that gets really complex. And there's loads of different intermediaries and lots of different banks get involved in that process. So if you want to send money to, let's say, for example, India, it's got to go through lots of different banks before it gets to the place in India where you want it to go to. And so each one of these banks will add a little fee, take a little bit of time up in the processing. So what Wise essentially done is they have a UK-based bank account, and they'll have bank accounts essentially in every single country where they operate. And so when you send the money to someone in India, it's actually you're sending the money to Wise's UK bank account, and they'll just then, like you said earlier, Tony, release the money from their Indian-based kind of bank account. So in that, there's not many intermediaries. It's just Wise you're dealing with, so they can keep obviously the costs really low. It's just their fee, and they'll actually use the mid-market kind of exchange rate. Whereas if you're using traditional banks and the SWIFT version, all these different banks will then add a layer to the actual exchange rate. So you're effectively paying double costs because you're paying extra fees, but then you're paying a higher kind of exchange rate as well. So that's the kind of problem they're solving. In terms of how have they done then since listing? Well, over the last year, so if we just look at the last 12 months, Wise share price is actually up around 58%, which sounds really good. But since listing in mid-2021, they are actually only up 15%, the share price. So since mid-2021 up until today, the total return has been about 15%. The FTSE 100 during that time has only gone up 28% during the same period. So it's not a massive rise, but obviously it is bigger than Wise itself. And if we look at the S&P 500 during that same period, that's gone up 48%. So you could look at last year and say Wise has done pretty well, 58% up, but actually since its launch, 15% total. But if we actually go back to its peak share price, so after listing around September 2021, when it hit its peak share price, if you measure it from then to today, you're actually down 3%. So it's not really moved too much from its original kind of placing, although it did have quite a decline over a number of years, and then obviously it's just in the last year it's starting to recover back up to where it originally was. But yeah, I think lots more to look into, and I think Awet, you've got some more on this.
Yeah, before we go to Awet, can I just ask you, Carl, is there a good reason why the share price was in the doldrums for a few years and has now spectacularly recovered? Is there a particular reason for that, or was that kind of growing pains? Do you know?
I think, well, Alec might be able to be a bit more onto this, but I would say some of this is probably linked to the UK generally, which I think is why they are going to a primary US listing. So what they're doing is they're going into the US stock market. So staying based in the UK, I think Guernsey they might be registering a new group company in Guernsey. So primarily going to be listed in the US, but they are going to stay in the UK as a secondary listing. But the tech sector in the world is obviously in the US, isn't it? So I think they're probably looking at those returns in the S&P versus UK and thinking they want some more of that.
And also, multiple jurisdiction listings isn't unusual. If it's especially if it's an international company, which effectively is, isn't it? Wise, because they're trading internationally. So, okay, that's interesting. So, over to you, Alec, to put a lot more meat on the bone.
I think to your point, in terms of why the share hasn't done well since IPO, we bought it recently. The main reason is I think most IPO is overhyped most of the time. They are, advertised and everyone is excited to get into it. And I think historically, most IPO shows after IPO shares price tend to reflect to the true intrinsic value. I think that's what we've seen with Wise. It was overvalued in the IPO market, and the market has, went to the right price, and then we entered into the right price. And as we invest in Wise, I think the share has been on uptrend. We are still on profit. The main reason I like Wise is because it's a mission driven. I think mission driven business historically tend to do really well. We've seen that with Shopify. The founder of Shopify, he tried to create an online e-commerce, and he couldn't find any good ones online, and they could do, the e-commerce for him. He ended up creating Shopify. I think that's when Shopify was born. And we can see the same pattern with Wise. Two guys, they were sending money to Estonia, and they can see it was quite expensive, and they just want to lower the price. That's a mission driven. And I think that's remind me, those mission driven business tend to overperform the market over time by significant. So the great things about Wise is, as Carl mentioned, they have direct link to banks over 70 countries, which is, avoiding SWIFT and so on. And historically, Wise is 3 to 10 times cheaper than banks. And most payment, 96%, settle instantly in compared to banks, which takes few days to settle. So Wise is way Disruptor, as you mentioned earlier, Tony, is disrupting the Fintech industry. And when you look at Wise annual report, what you discover is 66% of new customers comes from referral, which means they have lower cost of acquisition that build trust, and they create scale that drives price down, which that's what their mission is, to drive the price down. And I read a banking report in the US that was done a few years ago, and a normal acquisition for a retail bank for one customer is around $1,000 in comparison to fintech, which is $20, right? But Wise is doing it 66% for free, pretty much, is word of mouth. So this is great, a network effect. This is more customers you have, it creates more liquidity, and it gets faster and cheaper transfer, which they are accomplishing their mission. And I think there was a study was done by the United Nations in 2022, and they discovered sending money abroad was quite expensive. On average was 6.1%. And the UN target at that time was 3%. And the research they discover is banks remain the most expensive channel to send money. And Wise is pretty much tackling this. And currently on Wise platform, the average you can send for is around, I think is down to 0.53%. When we look at the market, addressable market for Wise is huge. There is 32 trillion global cross-border money flows around the world. And Wise is pretty much have around less than 5% of that market share. And there are huge runaway to grow into this market and to capture it. And they are doing it. They are building platforms as well, like API, which banks can use to transfer money, which is they are helping banks to solve their problem as well. Because as we know, it's quite difficult to acquire license in different countries, and it takes time and it takes money. but Wise is doing it and creating these platforms and selling it to banks. And we can see banks like Morgan Stanley, Brex, and Manzu, is it Alika Bank, are using Wise for their platforms. And so Wise is pretty much doing great things. As you mentioned as well, Tony, there's a significant alignment. The CEO hasn't sold a single share since the IPO. And it's 18%, remain around 2 billion, and all employees are shareholders, still strong alignment with the long-term focus, which what we like to see. And I think interestingly as well, recently Wise has a partnership with Google. You can have your Wise bank account integrated into Google Wallet. So you can send money internationally through your Google Wallet. So it's building platform growing, and it's just disrupting the banking system, making it cheaper, making it faster, and continue to do it. Doing it by not just the price of consumers, doing it for the consumers, thinking for them, like making it cheaper. So in the long run, it's a win-win. Customers win, Wise win. That, as I mentioned earlier, that creates a flywheel effect. So all they grow, and they can pass that cost to consumers.
Oh, I did have a question for you. I know you've got to come on to the strengths and weaknesses. But one of the things that occurred to me that could be a big threat to them in the future, is if crypto, particularly Bitcoin and stablecoin, replace the fiat money system. I know it's expensive to transfer, from wallet to wallet at the moment, but with volumes increasing and the amount of crypto, particularly Bitcoin, in usage, you can't help wondering if the cost could come down so much that we'll all be used to paying each other or transfer money to each other, even if it's just stable coins, and that the cost could come down so much that it could be a threat to Wise. What do you think about that?
I mean, there's several threats, but risk is everywhere in business, and we can see this is coming. But we have to remember, most of payments settled, 32 trillion is still settled in cash. So there's a huge market for it. While I think for Wise would be easier as well if they can see demand for cryptocurrency stablecoin in the future to just implement it, because it wouldn't be difficult for them to have that service. But currently, if you look at international money transfer, mostly is cash. I mean, especially most countries would, but in the future, I don't see any problem with Wise implementing, stablecoin or even cryptocurrencies if consumers are interested.
Yeah, I suppose when you think about it, there's a couple of things occurred to me about this. One is that if they're working with banks can just use Wise as their kind of intermediary, if you like. They could still charge more, but Wise have still got a market there because they're charging so little. But also, the other thing that occurs to me is that even though fees will keep coming down, they've just got to keep increasing their volume. But of course, some of the biggest companies in the world, like MasterCard and Visa, make tiny percentage fees on every single Visa and MasterCard transaction, and there are literally trillions of them every year. So, like you say, they've only made small inroads into the total addressable market on the retail side of I think you said 5%, but actually on the corporate side, it's much lower. They've made less than 1% inroads into the total addressable market. So that is another fantastic sign. The other thing I was going to ask you about, Aware, is that they don't just do money transfers, although that seems to represent round about 3/4 of their business, 77.5%. But they do also have other areas of business that they're developing. Can you tell us a bit about those?
Yeah, as I mentioned, like the platform banks can use, as you mentioned, to get regulatory license in different countries like India, Mexico. It could be time consuming for banks, and they haven't, as we know as well, banks are quite big. Banks are, they're not agile to move faster. That's why Disruptor always comes, because they're agile. They can see things that banks can't see and disrupt it. And I think that's one of the main reasons they're building something for banks as well, so the banks can use it. But the second one is for businesses, because businesses have supplier in different world. For example, if you have a supplier in China, which is you want to have multiple currencies to pay your suppliers, you can have Wise current account, which you can have multiple currencies within your Wise account. So if you can pay your suppliers instantly. So they're building that, as you mentioned, is very small, less than 1%. In fact, is quite small. But there is a huge runaway for this business to grow. And the API businesses I'm quite optimistic about is because it's very cheap. I think a lot of banks would rather just employ Wise API rather than create their own one.
Yeah, as you know, we've had experience of cross-border payments with running a fund management company, and of course, this subject of SWIFT payments and API payments came up with a potential investor in our fund, and that I won't say anything more other than that, so I don't want to give away any sort of private information. But what was interesting was that most companies or most banks still use the SWIFT system. It's very, very dominant. But I'm told that it can take years to get a license as a bank. So if you're a new bank, it could take many years to get a SWIFT license. Whereas I gather that a more modern method of money transfer is this API. I've always thought of API as just the way in which you can link with other companies' software openly with consent with both parties. But actually, it can be used for money transfers. And I've been told that the modern challenger banks are the ones who tend to use API. It's a much more modern way of making money transfers. So can you tell us a bit more about that? Because Wise seems to offer that service, Wise platform, APIs that let banks integrate Wise's cross-border infrastructure.
Yeah, I mean, if you look at Wise, they charge around 0.53%, which is very cheap. I mean, when you compare that to banks close, it will be about 5%, right? So by employing Wise API, you'll be able to integrate Wise services, which is a lot cheaper, and you'll be able to offer that service for your clients. So instead of, as I mentioned earlier, to acquire banking license, it could be quite expensive and time consuming. It takes a few years from my research. Especially when you go into like other countries like India, China, and you go into Japan, Brazil, Mexico, and so on, it's time consuming. And banks are, as I mentioned earlier as well, they are not flexible. They're not agile. Where Wise comes here and gets into this business and just get all these licenses while they're working with other pending licenses and offering that service cheaper than what currently banks are charging to banks. So that's why big customers like Morgan Stanley and Manzu, which is the UK challenger banks, the Alika banks, and other fintech businesses are using Wise as a platform. And you can see this is a business that they can grow, and once they grow as well, most of these banks will be embedded into their ecosystem. It's like the AWS for banks.
Yes, yeah, definitely. So Wise also offer their own Wise account, which is a multi-currency personal account. They've also got Wise Business, which offers international payroll, invoices, FX tools for small and medium-sized businesses. So they do seem to be keen on specializing in small and medium-sized businesses, which I gather is quite a profitable area that the large banks aren't so hot on. I gather that from another challenger bank presentation I went to recently, and I thought that was quite interesting. So it's good that they're focusing on a kind of niche area that's a profitable area for them.
Yeah, if you look at the migration from my study, there's around 280 million immigrants around the world, and normally they send money to their families and so on. And I think there's a huge market, as we mentioned earlier, 32 trillion markets, access to this. So there is a huge runaway for Wise to grow into. And the immigration is pretty much everywhere now. And I think people send money abroad, and, the world is connecting. And I think Wise will make this, easier for people to send money abroad. I think it seems to me like when I read Nick's Sleep, you remember pretty much Wise is doing that, is sharing the economy, sharing the fee with customers in doing that, because their obsession is to make it faster, cheaper, and everywhere.
Yes. So, Carl, what have you got to tell us about the criticisms and risks? There's always a downside to businesses. What can you tell us about that?
Yeah, I think with Wise, they're very niche, aren't they? They've got a niche area that they're operating in, which is sort of cross-border money, essentially. So there's always that, have they got the ability to really grow and scale into a huge dominant company? I think competition is becoming fiercer now in this area because it's more technology-led nowadays. There's other technology companies that can come in and potentially do something similar or maybe even improve on it. So they are facing challenges from, the challenger banks like Revolut, like your PayPal, Block Square, even traditional banks are trying to get into it now. So, that's going to compress their fees that they can charge.
Yeah. So there have been some criticisms of this company, which we have to mention as well. It's not all plain sailing. For example, there was an issue over misleading adverts that they were over claiming they were much cheaper than they actually were. An ASA ruling against them. They also were fined by the US CFPB for inaccurate fee stroke exchange disclosures. So there's been a few things.
Come to Carl's point. He mentioned about the risk. There was price competition and so on. And he's right. There is a price competition, but no one can compete with the price that Wise is offering. If you look at PayPal, you pretty much look at all of them. They don't offer close to Wise. Pretty much they are more expensive than Wise. And Wise is pretty much, the fee is on downward trend and continue to do so. And so it's right. There is a competition, but at the same time, Wise the first mover advantage and, using this and just obsessed with fee is just, it's still profitable, still self-sufficient, and it's just doing it with speed and precision. And I think it's leading this space.
Yeah, I think we've probably come to a good time to pretty much end this podcast. But do you have any final comments either you'd like to make before we end the show today?
Wise is a great business. I think it's a business that mission driven, obsessed with lower fee and passing that to consumers, and is targeting 2 trillion market growth. So we see Wise to emerge from this as a winner in the long run, and I still believe the company has a long-term potential. Is a mission driven, consumer obsessed, and to just make payment cheaper, faster everywhere. And I think those sort of business that we like.
Okay. Well, what we'll do, we'll put the links in the show notes. We do provide a one-page company snapshot to help you with your own research. I think you'll find that useful. Just contact us if you need that. Our next episode is going to cover a British company, actually, called Smarter Web Company, which has become one of these so-called Bitcoin treasury companies. We think that could be quite an interesting debate on the next show. If you're listening to us on Apple Podcast, please give us a ranking, because that helps us attract more quality guests and get more listeners as well. So all I can say is thanks very much for your attendance today, guys, Carl and Awet, and I very much look forward to you joining us for our next episode. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.